What's up, guys? Today, a very popular topic and something that I get asked about all the time, and that's monthly paying dividend stocks and which ones are my favorites. So in this video, let's talk about my favorite monthly dividend paying stocks. Now to start, guys, just because a stock is a monthly paying dividend stock does not mean that you should own it or that you should buy it. Just like there's many stocks on the stock market that I probably wouldn't want to own. Just like I don't chase dividend yields and I don't chase premiums, I always think about the company as a core. What are stocks that I want to hold long term that have the potential to return me either growth or a dividend? In that same way, I don't just buy a stock because it's a monthly paying dividend stock. It is kind of nice to have that monthly income, especially to like diversify away from just these big quarterly spikes that you might have and kind of like flatline things out. But there really are only a few good ones to choose from, in my opinion. And I'll mention it because you saw in the thumbnail, I do not think that Realty Income is the #1 monthly stock to buy right now. So I know everyone always talks about, every YouTuber talks about Realty Income, and I talk about Realty Income too. But right now, there's another one at the top of my list. So I know people are going to get down in the comments and list every single monthly dividend stock, guys. This is not a list of, this is like a best of, in my opinion. And the good news is, like, if you don't agree with me, I'm not the one investing in your portfolio. So we're good. Now, I guess maybe I will acknowledge some of the list of just so you don't think that I forgot about them. But first, we'll start with the entire Gladstone crew, like ticker symbols GAIN, gain, ticker symbols land, and ticker symbols good. Those three, in my opinion, not so good. I'm not even going to give them the time of day and think about them. I personally would never, ever invest in any of them. For each one of their particular sectors, there's something that's far better than what they have to offer. I mean, even with Gain, which is kind of like maybe the top of my list out of all the Gladstone ones, I would probably still buy Prospect Capital before I bought Gain. They're very similar. And even Prospect Capital is pretty sketch. And they're even above Gain for me. So I don't want to talk about, any of the Gladstone, Gain, land, good. And even we'll just get rid of Prospect Capital. Like I said, there are so many other great monthly dividend stocks that we can look like before we even look at those. Another comment section favorite is QYLD. I guess about QYLD all the time. I know people love it. I'm not going to invest in it. It's based around options trades. But Brad, you do the wheel. You make options videos. Yeah, I also acknowledge that it's a risk. It's not a great long-term play. The success rate is good, but not great. And like I said, we're talking about the best of. What's best for like a beginner? And for me, QYLD, there's just no reason to be putting money into that unless you're looking to gamble a little bit or you're looking for a speculative play. And if you're going to do so, there are so many better, even Bitcoin's a better speculative play than QYLD in my opinion. The next one I'll mention quickly and get rid of is SPHD, which is like the YouTube hype ETF stock. And it's an ETF, so I won't even throw it inside this stock video. And to be honest, I think the Dream Green Money Show, he did a video about why SPHD isn't even the best one inside that ETF space. So it's like, I don't know. I don't know why everyone loves SPHD so much. It's probably for the same reasons that everyone loves AMD and all the other YouTube hype stocks, but not the best. Definitely not the best, in my opinion. So now I'll get down into Seeking Alpha, and I'll talk about a couple that I really did look into. They come up a lot, people asking me to research, and I'll give my quick opinion on what I see. The first one is SLG Green Realty Group, and we kind of see what's the same story. They kind of dove down in March, and they've been trading pretty flat, down almost 35% for the year, 52% over the 5-year. 10 years is down about 14%. You see, they had a pretty steady run leading up until March. And, if we look at their dividends, they are a monthly dividend payer. They have no years of growth, which I'll talk about. Their 5-year CAGR, 10.34, pretty good. Dividend yield, not so sketchy, 5.93. As I started to look into this, I was like, all right. I'm like, here we go. Let's take a look at this. But then I just did some more deeper dive into what SL Green Realty really does. And even in the short summary in here in Seeking Alpha, there was a major red flag. And somebody from New York, guys, this cannot be looked over. SL Green Realty Group, an S&P 500 company, probably not for long, and Manhattan's largest office landlord, is a fully integrated real estate investment trust. So they are a REIT, okay? And we know with REITs, Their dividends are also going to be taxed at your regular tax rate. So most REITs want to be inside a tax sheltered account unless you want to pay full taxes on them. But guys, coming from New York and with what's been going on, maybe in March I might have said, okay, this situation is going to blow over and people are going to go back to work. Guys, I have tons of friends. I live in the suburbs just outside New York City. I know the news will make it seem worse than it is, and they'll show the boarded up buildings. All that aside, people are working remotely. I have tons of friends that used to commute to the city daily that no longer do so, and frankly, most likely never will. We are going to be losing office space at a monumental rate here in New York, and especially in New York City. And I think because of SL Green's realty, like focus on Manhattan, I hate to say it, like wipe them off the table, right? They might have been something to talk about, their potential, maybe a year ago, but they got to be off the table, guys. Stay away from Manhattan-based real estate. I beg you. Guys, Pembina Pipeline, PBA, they get a ton of love on the channel, inside my community tabs, everywhere in my comment section. They, once again, they took a nice little hit too. They've stayed kind of steady. If we look at the 5-year, their 5-year was looking awesome, and then this. So we haven't really seen that recovery that we want. That's not really a big deal, guys. Things are, these are crazy times and things are going a little bit crazy. If we look at the dividend chart, they've had dividend growth for 5 years. Their CAGR, 2.85. They're pretty much not even keeping up with inflation. The 116 payout ratio is something that cannot be overlooked. And we see this dividend, 8.92. You guys know if you've been following the channel, 7%, something's happening. Above 7%, things are getting sketchy. Even with AT&T, I'll admit it, like things get sketchy. But here's my major concerns with PBA. Although they're based out of Canada, it would be great for them to build their presence here in the United States of America. And with our current president-elect saying that he, quote, wants to dismantle the oil industry, that's got to be a red flag. We don't know what's really going to happen with that, and we have a pretty good idea, but dismantling the oil industry is going to do significant damage if they want to move down here in the United States of America, as well as if the trends and the beliefs and the things we have here start to spread internationally. Because we know the future is away from oil. Right? Are we still going to need oil in our day-to-day lives? Yes. And could PBA adapt into other things? Absolutely. But that's going to take a transition period. And really my position on PBA, and here's what I tell people, is like, if you owned it and you've owned it for a while, I don't think you made a bad play, and I don't think you should necessarily sell. But what I also will say as an alternative to that is I don't necessarily think you should be diving into it and starting a position with PBA right now. That's just my opinion. I said maybe if things change and the outlook of oil looks a little bit better on the future horizon. But right now, with it not really recovering, with the uncertainty of what's going on with oil and its future and what it does to the environment and that kind of play, I understand why people like PBA, but like I said, I don't think it's a position that we should be diving into right now. LTC Properties is another one that's been popping up on my radar, people asking me to do some research on. Same dip down in March, a nice flat chart since then. If you look at 5 years, they've kind of been up and down all over the place. They don't really have a steady growth or a steady fall. Like I said, they trade pretty much flat in this range up here from like the $51, $52 range, and then down around here before this March thing of $35. So in that $20 range, that's okay. Here's what I want to show you as far as the dividend chart. 0 years of growth, and I'll talk about that in 1 second. Not a good growth CAGR, and the dividend yield 6%. I'll take that. If we go back and look at exactly what LTC does, guys, they are pretty much senior housing and skilled nursing properties, pretty much 50-50. Their revenues did continue to rise, and then we had kind of this 2020 situation, but like, guys, people are getting older. People are living longer. I think that, senior housing is going to be something that's going to become more of a staple as, my generation, my parents' generation starts to get up there in age, right? People are definitely living longer and requiring more aid as they get into those 80, 90-year stages of their life. They also deal in triple net leases, which I love, guys. And if you don't know what that is, in short, that means that the landlord does not pay for taxes, insurance, maintenance, anything like that. So the tenant has to cover all of those things, and that's what Realty Income does, and a number of other REITs as well. That triple net lease, if you're going to be investing, definitely look into that. So I'm not really saying that I'm personally going to be looking to buy a LTC right now, but it's definitely something I'm going to keep an eye at. And if you're looking to add a monthly payer, I think out of the ones I've talked about, this one is something to put on your radar and do some research on. We'll see what happens with these guys over the next year or so. So here's my number one, guys. Here's who I think is the kingpin right now if you're going to enter a position. It is the newest stock that I am trading the wheel strategy on. I just acquired 100 shares of it, and that is Stag. And guys, yes, that knocks down Realty Income from my number one spot. And here's back to that position. Like, if you own a ton of Realty Income like I do, okay, you're doing good. Like, you didn't make a mistake. But I'm talking about people that are going to be diving in now and looking for new investments right now. I have to put Stag in front of Realty Income. I know I might get roasted for that in the comment section, but I have to do it. And there's a couple different reasons. Just looking at the chart alone, they have come back from March. They've raged back from March. And if I put in Realty Income, they haven't. Realty Income has stayed pretty flat. They haven't even approached what their highs were before we hit March. I just really, really like that, guys. The dividend as well, 4.61. They have the 1-year dividend growth, okay? The 4.61 dividend, guys, I love the dividend. Can't use a payout ratio, all right, because they are a REIT. But if we look at their funds from operation, which is kind of like the comparison, it's still right here as they have listed here in the Seeking Alpha, about 77%. Like I said, what they deal with in their industrial space, and this kind of like what gives them the edge on Realty Income. And I know Realty Income is collecting all of their rent and they're doing pretty good. But like, I think about what the future holds for commercial real estate, and Stag kind of has like a little bit of a chokehold on them. So they have 157 warehouses right now, most of them based in e-commerce. Their number one tenant is Amazon. You heard of them? Amazon. And are they going away, or are they just expanding everywhere? They just started retail stores, Amazon. They're pretty much going to do whatever they want. And with those two partnering together, unless Amazon starts building its own buildings, I think Stag, just with Amazon alone, has a pretty bright future. And guys, like I've mentioned before, REIT Stag is also a REIT. So make sure that you understand what REITs are and how the taxes work on that and what kind of accounts you're going to put these REITs in. But like I said, Realty Income and Stag, those are the top two. You should probably own both if you have a nice, strong dividend portfolio. I own both. I'm going to continue to add positions to both. But if you're day one, like, hey, I'm looking for my first monthly dividend stock to buy, I'm probably going to go with Stag. Till I catch you guys in the next one, stay positive, work really, really hard. Always, please be kind to other people. Hope you have yourself an amazing day and even better tomorrow.